Yo, I ain't here for the money, I ain't here for the fame. Though it might be nice to own a jet plane, I'ma do it all for you.
Back to the channel. Today we are going to take a look at the latest developments in the stock market, with a focus on the upcoming U.S. Consumer Price Index, CPI, inflation report, as well as the latest retail sales data. As always, I'm here to provide you with the latest insights and analysis on these key indicators and their impact on the market. So, let's dive in. The market started the week on a strong note, with equity markets seeing sharp gains and the technology-heavy Nasdaq outperforming, led by sectors like consumer discretionary and information technology. Meanwhile, short-term government bond yields also increased, with the 2-year Treasury yield reaching a high for the year thus far. This is due to market expectations for Federal Reserve rate hikes, which have risen to 2 additional 0.25% increases this year. All eyes are on Tuesday's U.S. CPI inflation report, which is expected to show a moderation in both headline and core inflation on an annual basis. Expectations are for headline CPI to ease from 6.5% to 6.2% annually, and for core inflation to moderate from 5.7% to 5.5%. In recent weeks, the move lower in inflationary pressures has been a catalyst for better equity and bond market performance. We should accept big move in either direction if, for example, month-over-month comes in really low, followed by services dropping alongside of goods. If everything comes in line with estimates, I don't expect big moves in the market. It's worth noting that last CPI report didn't cause a big move and SPY started coming down 2 days later. In addition to the CPI report, the U.S. retail sales data for the month of January is also expected to be released on Wednesday morning. Expectations are for retail sales to improve to around a 1.6% monthly gain, after falling last month by 1.1%. The retail sales figure offers investors a timely look at the health of the U.S. consumer, which seemed to stagnate somewhat towards the end of last year. Despite rising interest rates, the labor market remains resilient, providing some support to the consumer and consumer confidence broadly. Let's dive into Biogen Inc. This biotechnology company has been in the news lately as its upcoming Alzheimer's drug Lecanemab is attracting the attention of investors. We will be going over earnings preview, growth prospects and future plans of Biogen. Biogen reports earnings Wednesday before the bell. First, let's look at the consensus. The consensus estimate for Biogen's current full-year earnings is $17.10 per share, with analysts having different opinions on the stock. Some have boosted their price objective on Biogen, while others have given it a buy rating. According to data from MarketBeat, Biogen has a consensus rating of moderate buy, with an average target price of $312.85. Oppenheimer cut their earnings per share estimates for Biogen for the FY 2023. The Oppenheimer analyst now forecasts that the company will post earnings per share of $15.62, down from the previous forecast of $15.66. However, Oppenheimer still maintains an outperform rating on the stock with a target price of $315. Shares of BIIB opened at $286.30 on Monday, with a market cap of $41.23 billion and a P/E ratio of 14.58. However, there is some caution to be taken into account as Biogen has a history of extreme stock price volatility. In the past, the company faced a setback when its Alzheimer's drug Aduhelm was not covered by Medicare. The future of Biogen and its stock price will largely depend on the success of Lecanemab. Even if it passes regulatory hurdles, getting approval from the Centers for Medicare and Medicaid Services is another challenge. The company will need to secure approval from Medicare for the drug to be a success. Lecanemab, Biogen's latest Alzheimer's drug, has been generating positive data and has been well received by investors. With more than 6 million Americans living with Alzheimer's disease, and the costs associated with Alzheimer's and other forms of dementia expected to reach $1 trillion in the next 30 years, the market for Alzheimer's treatment is large and growing. Biogen has become synonymous with Alzheimer's treatment, but the company has other growth drivers as well. Its flagship product Tecfidera, used for multiple sclerosis, MS treatment, accounts for approximately 2/3 of its revenue. With generic competition rising in the MS market, the success of Lecanemab is even more critical for the company. In addition to its MS and Alzheimer's programs, Biogen is also making progress in new treatments for depression and various neuromuscular disorders. The company is ramping up its biosimilar product launches and has plans for new programs in neuropsychiatry, Parkinson's disease, lupus, and stroke in the future. In the meantime, Biogen's 5 different MS products will continue to drive revenue for the company, with the goal of building off last year's $7.1 billion revenue total. The company is positioned to become more diversified over time, which translates to a diminishing risk profile. With emerging growth prospects and a diminishing risk profile, Biogen is an attractive stock for investors. Lastly, let's take a look at Upstart. The report is expected to be released on February 14, 2023. The company is expected to deliver a year-over-year decline in earnings on lower revenues. The consensus outlook is that the company will post a quarterly loss of 48 cents per share, representing a year-over-year change of -153.9%. Revenues are expected to be $133.29 million, down 56.3% from the year-ago quarter. The consensus EPS estimate for the quarter has been revised 0.9% higher over the last 30 days, reflecting how the covering analysts have collectively reassessed their initial estimates. However, it's worth noting that the most accurate estimate is lower than the Zacks consensus estimate, indicating that analysts have recently become bearish on the company's earnings prospects. This has resulted in an earnings ESP of -18.75%. It's important to keep in mind that an aggregate change may not always reflect the direction of estimate revisions by each of the covering analysts. For the last reported quarter, it was expected that Upstart Holdings, Inc. would post a loss of 7 cents per share, but it actually produced a loss of 24 cents, delivering a surprise of -242.86%. Over the last 4 quarters, the company has beaten consensus EPS estimates 3 times. However, investors should still keep a close eye on the earnings report and management's discussion of business conditions during the earnings call. So, that's it for today's update on the latest developments in the stock market and tomorrow's watch list. As always, I hope you found this information valuable and helpful in your investment decisions. If you have any questions or would like to see more specific topics covered, feel free to leave a comment below. Until next time, happy investing.